a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about food and agribusiness ETFs. And we know that inflation is running at 40-year high now, and food index is one of the biggest contributors. Lately, in fact, we have seen that prices of food items that we buy in grocery stores, they have been going up. In fact, they were going up even before the war in Ukraine due to the supply chain disruptions caused by the pandemic and rising labor costs. And then the war in Ukraine sent food prices surging, and renewed lockdowns in China due to its zero COVID policy are also further worsening the supply chain disruptions. Now, Russia and Ukraine, they are major exporters of grain, and they together accounted for more than a quarter of global wheat trade and about fifth in corn trade. And Ukraine was in fact known as the breadbasket of Europe. The country is also biggest exporter of sunflower oil, and the war has entered its third month, and due to that, Ukrainian farmers are finding it difficult to plant and sow and tend to their crops. So they will miss critical planting and harvesting seasons, and many farm workers are fighting the war now. Russia and Belarus, Russian ally, they are also world's major fertilizer exporters. And in addition to sanctions, spike in energy prices have raised production and transportation costs of fertilizer, and that has raised the possibility of continued surge in food prices. So because of these rising food prices, many countries are now resorting to protectionism, and because they must first secure food for their citizens among rising shortages. So since the beginning of the year, we have seen more than 50 export curbs on foods and fertilizers. And this weekend, India, which is the second biggest exporter of wheat, banned wheat exports. And earlier, Indonesia, which produces more than half of world's palm oil, had restricted palm oil exports. Turkey has also banned exports of grains, oilseeds, cooking oil, and other agriculture commodities. So we'll take a look at 3 ETFs that investors can use from rising food inflation. So the first one we are talking about is by VEGI Agribusiness ETF, ticker symbol MOVE, very interesting ticker symbol. It holds global agribusiness companies, 56 basis points in expense ratio, and quite popular with 1.9 billion in assets. To learn more about this ETF, you can go to the code page on Zacks.com, read our research report articles, and using the link, you can go to the VEGI webpage for this ETF and see what it holds. So companies which are involved in agribusiness, animal health, fertilizer, seeds, then equipment, agricultural equipment, plantation, etc. And you will see companies like Bayer, Deere, Nutrien. These are the top holdings in the ETF and quite global exposure. 58% US and rest is international. Now the second one that I'm highlighting is by iShares. Again, very interesting ticker symbol VEGI. iShares Global Agriculture Producers ETF, and as the name suggests, it holds agriculture producers. This is also market cap weighted, smaller with 289 million in assets, and also slightly cheaper, 39 basis points expense ratio. And again, to learn more, you can go to the code page on Zacks.com. Using the link, you can go to iShares webpage. So exposure to global agriculture stock and see what it holds. Similar companies, Deere, Nutrien, Mosaic, these are the top holdings in this ETF and looking at the geographical exposure, this also has about 56% exposure to US and rest is international. Now, the third one that I'm highlighting is slightly different. This provides exposure to agriculture commodities, and this holds futures. And we have talked about future-based ETFs. They are meant for shorter term holding, and they cannot, because these futures, they are always contango costs in rollover, so they are more meant for trading purpose. So this holds 10 most popular agriculture commodities, and it aims to select futures contract with an aim of minimizing the impact of contango. Also expensive with 93 basis points expense ratio, but this has become quite popular this year because the food prices have been going up and all these food commodities have been surging. So again, you can learn more by going to the quote page on Zacks.com. I did a podcast with Invesco on commodity ETFs, so you can listen to the podcast too, and then you can go to Invesco webpage for this ETF and see what it holds. So wheat, which is surging today because India's export ban is the biggest holding. Wheat futures is the biggest holding currently, then corn, soybeans, sugar, live cattle, coffee, cocoa, etc. are the other holdings in this ETF. Now on the next slide, I have the comparative performance of these ETFs over the past year versus the S&P 500 index. Now you will see that the food commodity ETF, the Invesco product, which actually holds futures, is the best performer. Because food commodities have been surging. This is up about 20%. The other two ETFs are up between 3 and 7%. S&P 500 index is now down about 2% over the past year. Now this on this slide, I have the competitive performance year to date. So again, DBA, the Invesco product, is the best performer, up about 12%. The iShares product is up about 8%. Moo is almost flat, whereas the S&P 500 index is down about 16% year to date. And in full disclosure, I own Moo in the ETF investor portfolio that I manage. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything, and I'll see you next week.